What's going on, everybody? Charles Moon here, Prosper Trading Academy, and today we're going to talk about how to spot key signs for a potential bubble up in a stock. What does that mean? It means that we could potentially see not only a breakout occur, but continuance of breakout. You ever hear about stories of stocks going up, I don't know, 50% a day, 100%, 200%, and you wonder how you could have gotten in to capture that opportunity? Obviously, there's a lot of fear of buying in at highs and having that stock dump off, right? And then there's moments where people will say, there's no way I could buy into this. That's not true. I'm going to show you a clear-cut sign that you do want to see that A, tells me the stock is extremely bullish, and B, that the demand is so strong that it's poised to go up almost immediately once the sign is shown. Now, we'll point it out in a second, but the reason why this is important is because momentum traders, day traders, guys and gals, this is what we look for, right? Fast moves, big gains, short period of time. That's such a good component because if you're stuck in a day trade and it's not really doing much, you're probably in the wrong stock. There's no momentum, there's no real opportunity, and if it's just chopping back and forth, there's no real conviction, and more than anything, it turns into a coin flip. And if we wanted to gamble on coin flips, we could just go to the casino, play the roulette table. You could play red or black. It's pretty much a 50-50 coin flip. That's not what I want to do in the trading world. For me, I want to spot these opportunities, these visual cues, the markets, the charts, everything slapping you in your face, telling you, hey, we're about to go up here. And if that's the case, and you spot those opportunities, you're left with the question, do I or don't I buy? For me, that is always going to be a component that day traders need to figure out very quickly. Day traders need to assess that situation almost immediately, make that choice, and then aggressively pursue, because your margin of error is very small with day trading. And that's why this chart pattern here is going to be very prominent, because the margin of error is so small. We need to see clear-cut signs to try and take that shot, that aggressive trade stance. Otherwise, we may miss it. And there's no worse feeling than be like, man, I wanted to buy, I knew I should have bought, and I didn't, and now the stock is up another 30%. So this is going to be the visual cue that I'm going to show up here in a second. And I'll tell you right now, it may be something you already know, but if you don't, this may surprise you. Now, on my chart right now is a ticker named INDO. Now, the profile of the stock is perfect. Huge, huge, huge price movement. How much? Well, we're talking about a stock that was kind of in the upper 20s, hitting $49 today. And in fact, it really didn't take much time to get up there. Now, there was a very critical sign. There's going to be times where you miss on the dip opportunity, on the smaller pullback, and you see that it's making highs, and you're like, oh man, what am I going to do? Am I going to buy after this now? This is when you're going to be looking to buy. As you can see on my chart, I'll highlight it right here. These were the previous highs of the day. You can see that we double topped, rolled over, made new high, and immediately dumped, right? So when buyers are taking profits, they usually do it once a stock is making new highs. The people that chase after those names, oh, it's breaking out, it made new highs, end up buying in and having the stock go immediately against them, and then they're stuck, so they decide to liquidate. We don't want to see that. The one factor here that's going to give you a little bit of guidance is what's known as an immediate bounce back after it breaks. A lot of the times, stocks will pull back after it makes new highs. There's no follow-through momentum, but more importantly, there's no buy-side demand. That's important. Not only do we want to see buy-side demand, but we want to give a reason for short sellers to panic. And this is what's known as the immediate trap. This is what you want to look for. When a stock makes a new high, we've already established this was the previous high of the day. As you can see right here, we are actually higher than we previously were. So the stock was making new highs. And sure enough, just like they did before, the stock immediately retraced back. That's not the sign we want to see. Shortly after, the stock made a new high again. So if you notice here, the stock would make a new high and immediately dump off. Now it started to pull back, but then it immediately jumped and made new highs. pullback, and then immediately jumped. And that was the moment that it really started to just blow up to the upside. This was around $33.50. Within a half-hour period, it went from $33 to $49. And I'll tell you right now, this was a critical sign here. If you take a look at my chart right here, folks, I have a line drawn out. That line coincides with the high of the day. Because the reaction from that high of the day was straight down, that was viewed by the markets as a resistance point. For those that don't know what resistance is, you could associate it with the word ceiling. In essence, what it means, folks, right? What it means is that that is now perceived as the top in the market or in that stock, and people are going to be considering to take profits at that level. Now, as you can see, we spiked on high volume, and when we came back down, the low of that pullback wasn't all the way back to where it normally came from, like the breakout here, and it was a deep pullback. But instead, it was a really small pullback, and it bounced. Now, what you're going to notice is that the low, or the pullback, meaning the drop in the price, came back to that dotted line. Now, if you don't recall, let me just refresh your memory really quick. That dotted line coincides with the high of the day, or the old or previous high of the day. So the best advice you could hear in these opportunities is really going to be very simple. Now, think about what I'm about to say here and see if it corresponds, guys. When immediate resistance turns into immediate support, that is extremely bullish, folks. Okay? When the cap on a stock price, the ceiling, now all of a sudden turns into the floor, what that causes is an emotional reaction on one side of the market. That side of the market is the short sellers. The ones that were trying to short this overinflated stock price, they're like, oh, low risk, high reward. Boom, the stock goes against them. Oh, I need to get out, but let's see, it's starting to pull back. I may be able to actually still make money. Boom, it bounces, and then it starts taking off. And that's when the fear hits the short sellers. And then we have traders that are looking for these opportunities. Truth be told, folks, this is an actual old institutional / floor trader level. Floor traders happen to love extreme highs and lows, highs of the day, lows of the day. A lot of the times, floor traders will reference that high of the day price as their floor price and immediately jump in and help drive the stock price higher. And when that event occurs, it's known as a bubble up play. Now, I'll show up on the chart in a second. You already heard me talk about it. It went from 33 to 99, but you'll see how nonstop it was. But there were moments in this stock today, multiple moments, where it made new highs and it completely rolled over and never held. It just immediate dump from profit taking. But it just so happened at this exact moment, when the previous resistance turned into support, that truly was the ignition for the rocket ship that was known as INDO to explode. Folks, explode. We're talking about almost a 50% jump from that moment straight to the skies. Now, you can't expect $16 moves or 50% gains to happen every time. But this is a high probability trade setup, because if you go back in time and you see this reference, you can pull up any chart on any day and you see that these old highs turn into immediate floors and the stock makes a new high. That's when the stocks tend to bubble up. Sometimes it's for 1%, sometimes it's for 50%. There's no telling. The truth of the matter is, you should be looking at this as a short-term opportunity anyways. The last thing I would want you to do is take this trade and then hold on to it for the next week. Guess what? It's not going to do well for you. This is specifically meant as a day trading idea. For my swing traders, you could actually look for the same aspect, right? On the daily chart. If a stock gets above the 52-week high and then immediately uses that 52-week high as support, that could be a springboard as well. This is extremely important for you folks to recognize, because if you are looking at your charts all day and you see this moment occur, you're going to think back to this video and be like, aha, I remember. And when you see that break of highs and all of a sudden you see that turbo breakout, while you may not be in the trade, you can roll back and now you'll understand the power of this setup. Normally, anywhere from a $10 to $16 move over a 30-minute period, we see that in the likes of like Shopify or Tesla or Amazon or Google, stocks that are 600 and 1,000 and 2,000 and 3,000, but a $30 stock making that move, that in itself is pretty tremendous. Now, as you can see here, folks, as I relate back to the chart, that line just somehow became that immediate floor barrier. They coincide. It may not be to the exact penny, but it doesn't have to be. The high here was at 33.35. The low here was at 33.40. So you're telling me it's a coincidence that within 5 cents of that high, the stock immediately rebounded from that moment, literally from that moment, and decided to break out and make a new high. And then as you can see, the continuance of trend, the higher highs, higher lows, and then just out of nowhere, it went parabolic. It went bonkers. If you see these opportunities, you see these momentum plays, you're going to see these swoops, you're going to see these breaks, and you're going to see these runners. Sometimes the hold of the highs is immediate. You'll see this tendency as the stock keeps going up. And then when you start seeing it break critical price levels, then you know that's the time to get out. So let's kind of draw these lines here, folks, right? Right there. If you notice, a lot of these very fast 1-minute pullbacks tend to be within those ranges here, okay? So on the entire way up, let's talk about it here. From that breakout moment at that 33 level, folks, pop, pullback, run. Pop, pull back to that level, run. Pop, and basically just kept going up. Pull back right to that line and ran. Pop, barely pull back and ran. Popped, held this price level and ran. And all of a sudden at the highs, we did it again. And once they stopped doing that, once they stopped respecting those levels, that's when the stock rolled over. It went from 49 to 36. But if you just look at where I'm highlighting, folks, look at where all those lows are. Whoops, let me make that a little bit smaller. Just look at where all these lows are. I'm just going to put the dots right underneath those 1-minute candles so that you could see that almost all of them coincide with these yellow lines. Those yellow lines are drawn at the highs of the day. This is what we mean by riding the waves or stair-stepping up. So folks, if you want to know what a true breakout is, certainly it's a stock that's constantly making new highs. We're not breaking out, pulling back, then pushing. That's just continuance of trend. Breaking out is basically every 2, 3, 4 minutes, the stock is making new highs. It's barely pulling back. If you use moving averages on your chart and you have a faster one, a 5, a 7, or a 9, it doesn't even come back to that level or it doesn't get below that level. It just keeps riding the wave up. In this instance, folks, I actually look at this as something called a staircase, right? It's stair stepping up. Now, I'll draw it out in a second on that chart. If you notice from that moment that I highlighted at that 33 price where that high immediately became support, look at how much it kept doing that aspect on this entire run up until it finally failed to hold and finally failed to make new highs. And once that happened, guess what? The market's like, all right, it's over, time to take profits. That's also your critical sign there. When we start to see failure of holds at these levels, it's not worth holding because more times than not, it's going to roll back. So getting to the chart here, and let's talking about how it looks like a staircase. This is just a great reminder, folks, right? That when we see these moments of immediate holds and breaks, right? That's so important. It's like a stair stepping case up here. Now, if you want me to be even more dramatic, it's like to the floor, to the floor, to the floor, to the floor, to the floor. And if you just notice, all these lines are near the highs, the highs, the highs, the highs, and then the highs. So think about what I'm saying here. This entire run up, in a very short period of time, each one of these bars represents one full trading minute in the day. It's like the stock was walking up a staircase. No deep pullbacks, old highs acting as support, the ceiling becoming the immediate floor. This is basically creating a skyscraper in a 30-minute period, right? Skyscrapers aren't, traditionally a weird shape. They just go vertical. They're just buildings that go straight up. But to develop a skyscraper, you got to add floors. Well, if the ceiling of floor 1 is the floor of floor 2 and vice versa, we got to say, how high does a skyscraper want to go? Sometimes they only go up 4 floors, sometimes they go up 40, right? You just never know. But this is one of the clear-cut signs, not only based on momentum, but based on opportunity, based on demand. All of these things coming into fruition at one exact moment to create this beautiful mess. Now, this beautiful mess is known as a turbo breakout in a sense, but these are what's known as parabolic movements, right? But one of the clear-cut signs that the stock is going to make that type of move is seeing this type of maneuver continuously happening. I mean, the stock's in uncharted territory, so how do you know where to take profits if there's no reference? I mean, it's pretty simple. Once the staircase starts giving away, that's when you're going to look to take profits, folks. But in the meantime, ride the waves higher. Embrace the idea. When previous resistance immediately becomes support, that is some of the most bullish, if not the most bullish sign that you could see as a day trader. The demand is so through the roof that people won't allow the stock to fall because they're afraid of missing the boat. For you to be able to be in that position, then it's extremely, extremely important you learn this trading pattern. Day traders, swing traders. Day traders especially. Thank me later, because once you spot this and you're actually able to execute it, you see that bounce, you see that break, you'll realize how fast these gains are in a short period of time. Nothing like, 3 minutes of work and calling it a day. That's what dreams are made of, folks. Now, if you like what I covered here, don't forget, click on the like button, click on that subscribe button, do us a favor, leave us a comment below, tell me what you liked about it, what else you want to hear. I would love to hear from you folks. Ladies and gentlemen, I hope this helps you a lot. Peace and love, everybody.